The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Time for you to hear about a couple of more interesting growth and income stock selections made personally by the editor of our Income Investor Service, Brian Hamilton, who's here with me. First off is Microsoft.
Yep.
So did this stock get swept up in the recent tech rout?
Well, every tech stock took a little bit of hit, but Microsoft didn't take as much of a hit because they recently got upgraded by 2 coverage analysts. And basically they were saying that Microsoft's cloud infrastructure and their overall exposure to cloud is going to be a huge growth driver for the company going forward. Now, essentially, Azure and O365 are their backbones for their cloud. They're both cloud services. Azure is used by IT and developers to build and maintain applications, while O365 is a subscription-based cloud service for their Office products. Now, their company has been really focused on shifting their client base into the cloud services, and the analysts are looking at the cloud services revenues doubling to $250 billion. Now, this could potentially make Microsoft the first trillion-dollar market cap company. Microsoft has also been really focused on cost-cutting measures, especially their operational expenses, but by shifting clients into the cloud, they are already reducing some of their expenses already. Also, their margins are looking to be growing at almost 10% on an annualized basis. And as you expect, this has caused analysts to increase their estimates as well. But I really want to show you something also is interesting, is their sales and their earnings estimates out for the next couple of quarters.
Okay.
If we take a look at their detailed estimate page, we're looking at sales estimates for next quarter at 9.2, the quarter after at 12.7. You have to understand, Microsoft is a huge company, and we're looking at double-digit revenue growth. That's a massive amount of revenue. So we're looking at 13% for here, and it's high single digits. Now, if we scroll down a little further, earnings growth is in double digits as well. We're looking at annual double digits at over 10%, and for 2019, high single digits. Now, this is obviously translated into a really nice price consensus graph. If I can get these things off of here for you. Yeah, but as late, Microsoft has been doing fantastic. We have a really nice upwardly angled graph here. Year-over-year increases in annual estimates, which gives us our growth indicators. And the company at the same time pays a really solid 1.88% annual dividend.
All right. Sounds good.
Yeah.
Lockheed Martin is your other selection. Aerospace and defense stocks doing well lately. That's expected to continue, right?
Oh, aerospace and defense stocks have been doing fantastic, and the main reason is the new spending bill, which is about $1.3 trillion. Of that, $700 billion is going towards defense spending. Now, another positive for the overall sector is the President's recent appointment of John Bolton to National Security Advisor. He is deemed as very hawkish and high on defense.
Yeah.
And so these are really good positive tractors for Lockheed Martin and other defense contractors as well. But Lockheed Martin stands out because of their consistent contract wins. Just in the month of March alone, they signed over just under $7 billion worth of contracts that are expected to go out through 2020. Now, this is a really nice long-term revenue driver for the company as well. But like Microsoft, I really want to show you what's really interesting on their earnings growth, because they're a big company just like Microsoft. Right. If we look over at their detailed estimates page, we can look at earnings estimates, earnings growth of over 13%. 18% here, 16%. I mean, these are just massive growths in earnings. And if we scroll down a little further here, we can look at their estimate revisions almost all into the positive. And we can look down here, we can see the analyst estimates have been increasing across the board for the next 2 quarters and the next 2 years. But what's really interesting, now I showed you the Microsoft price consensus graph. Lockheed Martin's is even better. You look at this, this has been consistent from 2013. This is a beautiful upwards trend here, and even more importantly, year after year after year, increases in annual estimates that give us a really good growth indicators. Now, at the same time, the company pays a 2.44% annual dividend. So both these companies have really good growth trajectories for the next couple of years, and they pay solid dividends as well.
All right. Do you own them?
Personally, no, but I hold both of them in the income investor portfolio.
All right. That's interesting in and of itself.
Yeah.
Thanks for that. Don't forget, always more stock information on our website, Zacks.com. So to begin looking through it all, just get on over to the homepage. With Brian, I'm Terry Ruffalo.